Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you're all having a happy Monday. This is going to be your daily cryptocurrency market update, and what an exciting time it is for not just the cryptocurrency market, but the markets across the board. We've got Bitcoin at resistance, we've got the stock market broadly at resistance, certainly your indexes like the S&P and the NASDAQ. And then we've got gold at new all-time high resistance, and we've got the dollar and some of the yield markets at support. So it's a very polarized market at the moment. And I'm going to be looking at interest rates and the correlation that they have with the likes of the S&P, which you could term a risk asset. Now, I'm of the opinion that there's going to be, despite the macro backdrop, where if you actually look at some of the stats that are out there that are actually issued by the likes of the Federal Reserve, take that for what it is, with a pinch of salt, of course. But the economic outlook for the US is nowhere near as bad as the media portrays it. Now, that sounds crazy with rates at 5.25%. And of course, we know there's a real restriction in regards to credit. We are seeing in the likes of the UK, for example, high inflation and also a huge uptick in defaults on mortgages. But actually using the US as a barometer and a kind of to give us a broader sense of the macro, the US markets or the US economy actually doesn't look in that much of bad shape. And that's looking at data, not going on what the headlines are saying. But what I want to do in this video is show you the correlation between the stock market and interest rates and what happens when interest rates go sideways, because that's the period in regards to the monetary regime that I think we are, if not at, very, very close to. And I expect markets to do very, very well under this pretext. In fact, and this is a crazy call, you could even see a new all-time high for the likes of the S&P. There's going to be a lot of short covering, a lot of FOMO that takes place, not only with these key levels of resistance getting taken out, but actually also in regards to just the fact that things aren't happening. So right now, everybody's very worried about a crash, and a real nasty one at that. Now, we believe, and this is where we fundamentally differ from the bears, that a crash is on the horizon. The yield curve has a very good track record of predicting it. We're not going to bet against that. We just have our timing different. So I don't think that crash comes until potentially next year, end of this year, maybe earliest, whereas the bears ultimately are calling for that significantly at such a significant point of resistance for the likes of Bitcoin and the stock market. But we will look at it. It is very interesting and polarizing. We will go over a little bit of news. I just want to continue to highlight this on every single daily cryptocurrency market update video that we do, because people still, I don't think, understand just how much of a big deal blockchain is and the actual value that's going to be facilitated through it. Robinhood wants to make stock market like crypto 24 hours a day. That's the reality I think we're moving towards. Crypto removes time limitations, because ultimately it's a network that runs things, not one or a group of individuals. So you can have 24-hour markets, which is something I think we're moving towards. 24 hours remittance market, 24-hour, whatever you want to sort of swap and change around. Everything, security market, the fiat markets, the property market, I think, is going to be onboarded and actually transacted through blockchain. This is a future we're moving towards. We are waiting on regulations. There's been some really interesting progress with that, with European documents and also US documents and UK documents that have come out recently. And we are moving towards a regulated space. Regulations are what take this industry from the 1 trillion to the tens of trillions. And I intend on bringing as many people along for that journey as possible. But we will get into a little bit of fundamentals. Also, Binance leaving Canada. We did play you a very interesting clip from the chief financial officer, or not sure, second in charge in Canada, talking about how they're going to go after people's savings and encourage them to spend them because they've been naughty and saved them up during the past couple of years, which is a very scary reality. But, you've got Bitcoin at this resistance level, 30K, nice big resistance that we forecasted. You've got the stock market at resistance. This is the NASDAQ. And you'll notice there's a trend here in terms of higher betas, which I think is very worth paying attention to. Bitcoin is still 60% down, okay? So it is 60+% up from the start of the year, nearly 70%. So Bitcoin's that far down as a higher beta, more speculative risk asset. Then you've got the likes of the NASDAQ, which is 24% down. And then you've got the likes of the stock market. I think there's similar DNA throughout all of these. We were speculating on if this does turn out to be an inverse head and shoulders, you are going to have potentially new all-time highs. And actually, if we look at interest rates, which is where we started this video off, and what happens when interest rates go sideways, certainly over the prior 3 times, 20 years plus worth of data, the stock market, certainly the S&P has typically gone on to put in a new all-time high. We think that period is ahead of you for the markets. We do believe that a crash is coming, and it's going to be a very severe one, as predicted from the yield curve. However, fundamentally, we have difference in terms of timing. And I do not believe that this resistance that you've ran into across the board is going to be resistance that leads to new all-time lows. You've had a few touches on it already. Here, for example, and you've shown your strength. The fact that we've got smaller right shoulders than the left is very promising. And I do think that with the likes of the S&P, something like this could play out. It sounds crazy. And with the likes of the NASDAQ, you could get a similar thing. I do believe these have broken out. You've got, staying on the higher beta fashion, the S&P is obviously down less than the NASDAQ and Bitcoin. And then you've got the likes of the Dow Jones, which is, again, doing something very interesting. So you've got these betas. If you look at the stock market, people calling for a bear market right now because of the news and the narrative. Well, tell me if Apple's in a bear market. Is gold in a bear market? Is it new all-time highs? It's very interesting. I believe that the charts paint a very different picture from the narrative that's out there. And just because we're at resistance, that does imply short-term bearishness, a pullback, resistance to act as resistance, vice versa for the dollar and the yield market, support to act as support, which you are getting a bit of. I mean, the FTSE, for example. How's that bear market looking? The narrative out there, ladies and gentlemen, does not match what the charts are telling me right now. And this is where I think most people go wrong. Most people are narrative driven. You've got support here for, this is what we really want for the yields, for them to roll. We think this is the top. Remember, the 2-year yields lead the Fed funds. And actually, we're seeing a very similar thing playing out today that we've seen historically. And that is the 2-year tops. You get a slight increase. And then, of course, it goes sideways. This sideways period is what we think is for the markets. And we think that the FOMO are flipping the resistance with a similar thing playing out to historically what's happened with rates going sideways is going to, it could cause new all-time highs in the stock market. And I think is genuinely going to cause not new all-time highs, but a good run for the cryptocurrency market into potentially whatever the yield curve is predicting. So dollar again, I like the kind of dollar rolling here more and more. It's not a beautiful head and shoulders at all. It's very, this is what you've got. It's polarized market, like I say. You can see this. Dollar goes up, Bitcoin goes down, dollar goes down. The stock market's been rallying since pre this. However, Bitcoin didn't appreciate like the stock market because of the whole FTX spill. But you can see what's going on here as this has gone down. Now you're getting a bit of a rebuttal for this. But I'm betting that this is going to happen essentially. And my money's where my mouth is on that call. But let's look at rates going sideways, what the S&P's done. And then you tell me whether it's too crazy to expect a similar thing to play out once again. This is just charts, guys. Feel free to... what's that, a 10 and 3 month, which is still a hell of an inverted yield, by the way. This is another thing as well, right? When people are calling crashes based on the yield curve, they are forgetting that actually the crashes typically occur when the yield curve is uninverted, okay? We can do that with this one. We could do it with obviously the 10s and 2s, which is the main one that we look at. Bollinger Bands on here, wow. Been a while since I've used Bollinger Bands. Although I do think Bollinger Bands are pretty worth it. If you look at from the point of most inversion, this is where your stock market was and it went on to rally. Inversion, stock market rallied. Stock market's also very confusingly in orange as well. This is just one thing, guys. There's multiple things that we look at that no one's giving me an argument for on the bear side whatsoever. Again, here's a bit of a pariah, but you still get a rally here. here, of course, stock market goes on to rally. The crash doesn't typically come until later on down the line, until point of an inversion. Right now, you're at point of inversion, which is why I think people calling for a crash right now. I'm not really sure where they're getting that from. This is the Fed funds future rate, which we don't want. Let's look at the actual Fed funds in relation to the market. Remember, this sideways period we think you're now in, based on the 2-year yields topping, look at what happens to your markets. Okay, so you get, let's actually do the S&P and overlay the Fed funds so we can work out percentages. Get rid of that. This doesn't have to be a head and shoulders. It's just something that I'm looking at and paying attention to. We overlay the Fed funds. Sideways period for rates. Here, look at where the stock market was and look at what it did. It went on to put in new all-time highs. This is the point of where they went sideways. Funnily enough, as rates were climbing, the markets went down. When they went sideways, markets went up. Similar thing happening today, guys. You're going to get this FOMO period, and the positioning is going to change very quickly, and you're going to find out what thin markets feel like over the summertime, I believe. People are going to miss this. People have already missed the 15K low. Now, we're not calling out the absolute bottom because there's no way we can know that. We don't know 6 months down the line and what could happen. We just don't think it is, and we took a position back into the markets. I released a, if I do say so myself, pretty damn good daily market, not daily market, Patreon update yesterday where we looked at this. We looked at economic scope for the US, some of the data from them, and actually showed that the picture wasn't that bad. If you guys do want to join the Patreon, now is a great time. Whilst it's not a small group, but relatively small, and we can be very intimate. You know, there's lots of great things in there, and it really helps during turbulent time periods. Certainly, if you have a pullback against the trend, the broader trend that you think you're now in, to be in a group of like-minded individuals that are all working towards one goal. So we've seen one rally on sideways rates. Again, another one. Stock market goes on to put in new all-time highs, rallies 30%. This is a bit of a pariah. However, if you look at where rates actually go sideways, you still do rally off the back end of it. Now, there's been a whole list of different criteria here. You do put in a new candle body high, but if you look at the point of rates actually going sideways down here, you get this rally. So this has been typically the case for a long, long time, and we do expect it to be a similar thing today. 2001's a bit different. You can see again, rates go sideways and start to plateau a little bit. This is going right back to the 90s. Look at, you know, the sort of rally that you're in. So I think actually there's going to be a huge mismatch of positioning. People aren't looking at this sort of stuff. They're just gobbling up the mainstream narrative. But this is a good technical, also fundamental macro reason to be bullish actually over a period of rates going sideways. And I do think that's the case. Look at inflation. Some people have inflation at, you know, true inflation's at below 4%. 3.8 something was a thing. That lags. I do think inflation is coming down. I do think you're going to have a Fed that pauses. I think that pause and the fear that goes away with that pause is going to cause a really aggressive market. It does make sense to short resistance and long support. That does make total sense. However, to what degree? You know, I think the people calling for a crash right now, tell me why a crash happens now. We know a crash is coming because of the yield curves there, but why does it happen now? Because Silicon Valley Bank failed? Actually, what was the reaction to that? The Fed came in and bailed them out. It's a very different set of circumstances to prior ones. There are some alarming indicators, but they're in specific sectors. If you look at the economy broadly, and you can do that from the Fed's own statistics, you look at recession indicators, all this sort of stuff, actually things don't look as bad on the face of things as people are making out. So we do expect higher prices for Bitcoin. 40K plus is what we're looking at. You have, and this was always forecasted, by the way, guys, before we had even ran 30K. Even when we were down here, we were looking at 30K and saying, okay, that's going to be a tricky area. Look at what you've got here. It's very interesting to me as well. We just take the bear market. Look at where all the volume is. It's interesting. A few things, a few food for thought things there. You know, we've looked at so many different things. We have a very good argument for why we think that the markets are going to do well. We can see sentiment very much changing very quickly. I think people are way too bearish. And we said this right at the start of the year. You had people flipping bearish down here. You flipped bearish after 90% plus down for altcoins. Never has made much sense to us. Of course, Binance announcing exit from Canada, citing regulatory tensions. This is going to be the way. The US, Canada are really playing with fire in regards to, not making it accessible for companies to deal with them. And I think this is going to prove to be a real issue in the long run. That's all I've got for you in this video, guys. Food for thought. Let me know your comments in the comment section. And on that note, I'm going to love and leave you. If you enjoyed the content, like us, I'd appreciate it. So as a comment, please do check out the Patreon. Well worth joining, in my opinion. But of course, I would say that. Check it out for yourself. On that note, I'm going to love and leave you. Have a magic Monday.